Hi, and thanks for joining us for the May 2021 survey results from the Purdue University CME Group Ag Economy Barometer. I'm Jim Minter, Director of the Purdue Center for Commercial Agriculture, and I'm going to share the results briefly with you for this month's survey. The Ag Economy Barometer declined 20 points this month to a reading of 158. That's down from 178 a month ago. Even with the decline, that still leaves the index far higher than it was this time last year. The decline in the barometer was driven by declines in both the index of current conditions and the index of future expectations. The index of current conditions fell to a reading of 178 from 195 a month earlier, and the index of future expectations fell to a reading of 149 from 169 a month earlier. The Farm Financial Performance Index also declined 12 points this month, but even with that decline, that's still the second highest reading we've ever received for that index since we started recording data on it. The Farm Capital Investment Index fell 10 points to a reading of 65 from 75 a month earlier. That still leaves that index about 15 points higher than it was this time last year, however. Looking at a couple of follow-up questions for that Farm Capital Investment Index, there was an increase in the number of farmers who said that they planned to reduce their farm machinery purchases in May versus April. And as you look at a new question this month, we asked people what are their plans for constructing new farm buildings and/or grain bins in the upcoming year. And 59% of the producers in the survey said they plan to reduce their purchases and construction of new farm buildings and grain bins. Despite the declines in both the current and future expectation indices, farmers continue to be very bullish about farmland values. The long-term farmland value expectation index rose 10 points to a record high 158 this month. And we asked farmers about their cash rental expectations for the 2022 crop season. 39% of them said they expect cash rental rates for farmland to rise by 5 to 10%, and 43% said they expect rates to rise by 10% or more. There's an increasing difference in opinion with respect to whether or not we're going to see good times in agriculture, depending on whether or not you're looking at the crop sector or the livestock sector. The percentage of farmers that say they expect to see good times in the crop sector has been increasing. The percentage of farmers that say they expect to see good times in the livestock sector has been decreasing sharply. In particular, you can see that there was a pretty sharp decline in the percentage of farmers that expect to see good times in the livestock sector versus last month. There are a number of tax policy changes under consideration in Washington, and so we continue to ask farmers their perspective on tax policy, especially with respect to the impact it might have on estate taxes and their ability to pass farms on to the next generation of farmers and their family. Overwhelmingly, farmers are telling us that they're very concerned about changes in tax policy, making it more difficult to pass their farm on to the next generation of farmers and their family. That wraps up our discussion of this month's survey results. The full report is available on the Purdue CME Group Ag Economy Barometer website, purdue.edu/agbarometer. And we encourage you to join us for our upcoming Corn and Soybean Outlook webinar, which will be held on Monday, June 14, following USDA's release of the June WASDE report. More details on that webinar are available at the purdue.edu/commercialag website. On behalf of the Purdue Center for Commercial Agriculture, I'm Jim Minter. Thanks for joining us.